Hey everybody, it's John here. I create cryptocurrency videos about Dogecoin specifically. I cover Dogecoin news and Dogecoin technical analysis, aka the sticks. All right. In this video here today, on March 22nd, 2021, I'm gonna cover the Dogecoin sticks. All right. So before we get to all that, just do me a huge favor and tap that subscribe button and tap that like button because that's all I ask for you. It's super easy to do. Takes you less than a second. It costs you nothing, and it helps out the Dogecoin community. Okay, because how did I do that? Well, it spreads this video out to more people who would not be aware of it. Okay, because YouTube kind of pushes the video to whoever's that hasn't been exposed to it. If this video gets a little traction, all right. So that's what I'm doing for the community, and I would hope you would do the same thing. Okay, so you came for the sticks. Let's get to the sticks. All right, so. It's March 22nd, 2021 here, the Dogecoin stick today. And as always, I like to stick around with the daily chart here. And I did mention yesterday that even though it's looking temporarily bearish, I still see no reason for it to go down a lot. Okay. All right. I mean, it may pull back some, in which it is currently today. You can see it's pulling back to about 572 current price. It dipped down to about 567, and the high was 58. Yesterday it was about 596, and the low was 567. So this looks to me like just based on numbers real quick, low of 567 yesterday, and the low of 567 again today. It looks like we could be possibly doing a descending triangle on a short time frame. Just looking at the numbers real quick without even going to the details, but I can probably show it to you later on when we get to it. When I go into the more microscopic level here. So as you can see, the 50 MA is at 555, and now it's 559. So instead of being a 0.005, now we're seeing 0.004. So it's a little, it's getting slower and slower because every day we're only hanging around five, about 5 cents and some change here, right? And that's where we've been for the past, I don't know, maybe like, let me see how many days that's been so far. About 35 days. Yeah, I would say about 35 days, about a month now. We've been hanging out here, about 5 cents here. And you're probably wondering, wow, this is terrible. Why are we still at 5 cents for a whole month here? Well, you gotta bear in mind that, we're accumulating here. We're basically setting a new standard here. So it's gonna take time to establish. It's been a month here. So I wouldn't be too concerned about 5 cents here. 5 cents here, it seems like, to me, could be the possible new benchmark here. Okay, obviously it can pull back a little more, but for the most part, anything from this range here to here, this is pretty much where Dogecoin is trading in this range here, about 4.43 to about 6.3. That's gonna be the range for the most part. We've seen this in the whole month here, for 30 days now, or 40 days, I guess, on this highlighted thing right here, about 45 days roughly, and the range is about 4.3 up to about 6.3. So we have a 2 cent gap difference here, and this is the range here. Of course, obviously at 5.7, we are on the more upper part of the range here. Obviously, we can go lower as well, but I mean, it's possible. And given the fact that on a MACD now, you're seeing it starting to trend down now. But most important here is that I've been mentioning that 50 MA is going to be a bounce off. That may or may not happen, but usually it happens though. And as always, technical analysis is more of an art than a science here, so there's no guarantees here. But as I mentioned to you guys when I cover the news as well on a different video, you can check that out. I see more reasons for Dogecoin to be bullish rather than bearish here. So to me, this to me still looks like a fake out shakeout. All right. On a daily as well, we have the 50 over 200 still, so it's still golden cross, so it's still bullish. Okie dokie. Let's see the volume here. About 50 million. Yesterday was 71 million. The previous day, 115. Okay, but I mean, like, on the 20th, that's like what, Saturday, and then Sunday. As I said, weekends are lower volume here, so I mean, those lower volume, you can do what you want for the most part. I wouldn't take it too serious. Let's check the MACD now, which is kind of more important in my opinion here. So you can see that we've been training for, let me see how many days. Let me hide real quick, count it. We've been training down for 9 days now. You can see it. We've been training down for 9 days. So it's kind of confirmed, and it crossed over, and now you can see it actually descending now. The actual blue line on a moving average is actually starting to dip down now, and and the red sticks here, it's starting to increase also from zero point 0.01 to 0.03. Obviously, these are negative numbers here, so we're starting to see it accelerate as well here. So To me, as long as we stay in a bullish quadrant here, yeah, it can do this, but it can take its time and still bounce up though for the most part. It's until it actually crosses over into the negative territory, that's when I'd be a little more okay. We're bearish now. Time to short, time to start shorting for the most part, or buying dips right here. I mean, if you're a day trader, so if you're an investor like me, you just buy dips. You don't really care too much. Um, that being said, I'm still watching it, and we will see in the days to come here. Obviously, it's going to have a ways to go. We're seeing it move down at around about a 0.002 or 0.001 trajectory here. So if it goes at the rate it's going, it could take about 8 to 15 days to reach um, the zero around here, which is kind of like the neutral zone here. So we can see in about 2 weeks, a week or well, I would say 2 weeks. Give it 2 weeks on a daily chart here. If everything stays consistent, we should see in 2 weeks where it kind of wants to go after that. But for now, it's definitely trending lower here. So I will start, open your wallets up and wait for some dips to buy, some bigger dips. How far? We don't know yet because obviously on Saturday and Sunday, the volume was very low. So we can't really make too much. We can't take it too serious, is what I'm trying to say here. Because when you have low volume, you can kind of do where you want. And with that being said, there's low liquidity, so there's only a bigger spread, and it's easier to push it either which direction, bullish or bearish here. With that being said here, let's go out to the 4-hour chart and see how that looks today. Let me get out of this 1 second. Alrighty. 4-hour chart. Alrighty then. Alright. So as I mentioned for the past few videos as well, at one point the 50 MA became a support and I was bouncing off it. Now I kind of pierced through it, and it kind of now the 50 MA is looking like resistance now. So my next support I would say is going to be the part of 200 MA, which is about 544. So around there, that's probably where you want to buy. And honestly, that's probably where we're heading, to be honest, based on the trajectory here. And you can see also as well here on a 4 chart, it's starting to go into the bearish territory here. But the important to note is that even though it's here, it hasn't finished cycling yet. So we still see the 12 MA pushing down for the most part. So that being said, is that we're gonna have some time for the most part, So I don't think this is done yet because you can see a few hours ago or a few seconds ago it started trending up and then it started trending back down again. So it's kind of seesawing. There isn't a real trend here. It seems like any bullish movement is getting sold off fairly quickly. So I wouldn't be buying the dips as of today. Possibly, I'll probably wait till tomorrow to buy a dip or two. And just to see where a chart's going. I like to see it where it confirms after about 5 or 6 ticks. When it confirms then I'll probably buy around there. But for now, it's kind of seesawing. So really, we don't really know where it's going yet. But it's definitely trending down though. How far we don't know yet, as I mentioned before, because the volume is so low. It's very hard to say. But one note here is that you can see currently still, even though it's looking bearish on a very short term on a 4-hour chart here, the 50 MA is still over a 200 MA, and the 50 MA is starting to trend down now. So it may do a bearish cross in the coming days. Maybe sometime in the beginning of this week, or maybe near the end of the week as well, depending on how fast or slow it moves. When that happens, we could probably move in lower. So that's kind of why I mentioned before in the video, in the earlier part of the video here, that 525 may be becoming a possible support zone here, because as you can see on March 7th, it popped up right here, right? And after that, we've been accumulating up here for how many days? For about 15 days now. After that, we've been accumulating for 15 days here. So I don't suspect that if we do hit 525 around there for a previous resistance, now becomes support. I don't see it just popping right through it, I see it hitting it and bouncing off it and then starting a new trend upwards, you know what I mean? So based on that fact right here, based on what I see here, so that's kind of what I think, based on the text here. So it'll probably hit around 525, who knows when, it could be a few days, it could be tomorrow, but I will probably give it a week or two before I see it happen. It could be even sooner, who knows, right? Again, it depends on volume here. And you can see our 4 chart is starting to kind of come down here. And if you look closely here, this kind of looks like a descending triangle for the most part. If right here, and it looks like right. And this is about this is pretty much going to be the the whatchamacallit, the the bottom part of the triangle. I'm sorry, I had a brain fart there for a second there. So this is kind of what I'm seeing for a possible descending triangle here. something like this. So I suspect that we may go a little lower, but I don't think we'll go too low because in the past, anything below 5.6, 5, it gets bought real quick. So that being said, there and right on. I mean that's kind of what I see, and that's kind of what I think as of the moment here. Um, and we're gonna see the 50 possibly touch a 200 MA, but I suspect it'll probably bounce off it as well. It's hard to say right now because the trend is getting all mixy, all wishy-washy. There isn't really a clear trend here, so this is more of a just okay, wait and see kind of thing. There's no real guarantee right now, but it's definitely moving down. We can see that for sure, and that's kind of what I see here for now. I'll leave it here for now. Actually, I'll leave it here just for the temporary sake. I just didn't want to put too many colors here to make it kind of confusing. Um, and we can see also, as I mentioned before, on the MACD, it's starting to trend down again. So let's see, 1, 2. All right, about 2.6 so far. So maybe give it maybe like another maybe 10 p.m. tonight, or I would say tomorrow morning around 8 o'clock. I'll see what happens. Let's move on to the 50-minute chart here and see what's going on as well. Okay, there's a big sell right there, a 7.5 million. All right, maybe the bear cover, who knows? That's hard to say, but you can start seeing it. Definitely start seeing it kind of. Well, I wouldn't say necessarily trend down, but it's starting to. It looks like it's you can see it from right here to here and to here. So basically, when you see that right there, it looks like on a 15-minute chart, it's looking a little weak now, right? And you see, kind of do it again, and you see each volley here, each valley, it gets smaller and smaller here. So we're kind of seeing this right here, and this is kind of why I think it could be a possible descending triangle here, because usually a descending triangle is bullish as long as it keeps tapping that support, right? And then it kind of busts up because then people realize, okay, you know what, the support is pretty strong, so we're gonna buy and bounce off it. And that's kind of why I also said on a daily chart here that I'm saying that this looks more to me a fake out, a shakeout, is because we can see in the past, anything around 5, 6 and below, it gets bought real quick right here, right? And you can see on a daily, the movement is very, very minuscule. It's very low. Obviously, I don't want to discount too much because it definitely is confirmed and moving towards that trend, but on a very low volatility. So it's hard to really give it too much credence. I still believe we're still accumulating here. And with that being said here, I mean, given the fact that we're kind of hitting these supports and bouncing off it fairly quickly here, I truly do believe that we're going to bounce up, though, rather than break down. If we do break down, we will see 5.2. I wouldn't say it's guaranteed, but it's definitely likely. You may see anything around 5.2 to 5.3, or it may test around there. You may not see an obvious textbook play where it hits it like 5.35 exactly, right? Because that's just the way things are. It doesn't always fit the way you want it exactly. It's not what you want. It is how it is. So, people might see, okay, you know what, I'm gonna buy now, and then it's kind of like a self-fulfilling prophecy, right? Everyone knows about that. They buy it right away, and it pops up. So there goes your buying opportunity. So that's kind of why I mentioned to everyone, all you ladies and gentlemen here, to always buy dips and always buy with bite and. Not bite, but nibble. Always nibble, okay? So what I mean by that is kind of like, buy small, accumulate over time here, okay? Because obviously no one can predict the future, and when you buy dips, you're insulating yourself. And when you nibble opposed to bite, when you buy the Dogecoin here, or any kind of stock in general, or any kind of asset here, you're protecting yourself also from future dips and future crazy drops, right? Because with cryptocurrency especially, it's very volatile, and that's the best way to protect yourself, right? Because if you have no dry powder in the bag, and it drops by 50%, well, I guess you're SOL, right? You gotta wait for a long time, and it's very hard to break out of it. So with that being said, that's kind of why I like to buy over time, and I share with you what I do. I don't give financial advice or anything, but if you want to follow, you're more than welcome to. And as always, it's Hey John. Do me a huge favor and subscribe and like, okay? I will catch you all on the next one.